Hello, my name is Renee Grossman. Welcome to February's edition of the Multifamily Builders Council webinar. Um, Again, my name is Renee Grossman. I'm the chairman of the board of the Multifamily Builders Council. And so I'm excited to present today's and be the MC for today's webinar. I want to first thank our two partners. Builders First Source, Kenny Duckworth. Thank you to the Builders First Source team. Also Nationwide Gutter. Thank you to the Nationwide Gutter team for sponsoring and being a partner in today's webinar. Just a few announcements for the webinar. It's being recorded on the Dallas Builders Association's YouTube channel. And also you can find it on our social media platforms. Also a special opportunity today. I want to move everybody to become a member of the Dallas Builders Association LinkedIn page. So if you're not already, please go on the LinkedIn page for the DBA and ask to be invited in, and we will do that as well, so you can follow us on LinkedIn. Also, there'll be an opportunity for questions and answers. So on the bottom of this Zoom video, you'll see a question and answer tab. Please type in any questions that you may have for our speaker, and we will be getting to those after Dan has an opportunity to present today. Also, don't hang up after Dan is done, because I have two special announcements that I'm going to be rolling out today after the question and answer part of today's webinar. So with that, I'm honored to announce our keynote speaker. Dan Sindelar is our market analysis for RealPage. He's been with RealPage for 4 years. He's considered an expert in the multifamily space. And so without further ado, please welcome Dan Sindelar. The forum is yours.
Thank you so much. I appreciate it.
Very well.
I will go ahead and share my screen and get the presentation started. I want to thank you for the opportunity to come in and present. Like you said, I'm with RealPage for almost 4 years now. Started on the account management side for our data and analytics platform. So the data that you're going to see here on the slides and what you've seen in the past, and kind of worked my way up, and before transitioning over, covered our REIT clients and institutional investors, banks and such, and kind of covered the elite clients. And then about November of last year, moved over to the market analyst team, and excited to present to you guys today. I think, there we go. I think I'll be able to see the questions up at the top. We will have a question and answer at the end as well. This shouldn't take the whole time, so we should have time at the end for questions, but do want it to be conversational in nature. So a little agenda, we're going to go over DFW's economy. I've also got some slides to kind of give a national comparison. So look at jobs, income, home prices, obviously a lot to talk about considering the year that was 2020, especially with COVID. Then we'll get into market performance in DFW. So we'll go over demand, supply, permits, rent, occupancy, and then take a look at the forecast. And then at the end, I wanted to do a good Texas comparison. So your 5 major markets, or 6, I guess if you include Fort Worth, major markets within Texas, and then some concluding thoughts. So when we look at employment over last year, and this is at a national scale, we can see the large delta and the job loss that occurred in April and then in May with the pandemic and the shutdowns and with COVID-19. And so we were able to bring some of those jobs back. But as you can see, during the fourth quarter of 2020, things kind of stalled a bit. And on a national scale, we're still down about 9 million jobs. Good news is that as we take a look into 2021, we'll get about 5 million of those jobs back in 2021. We'll get another roughly 2 million in 2022. So we'll get about 7 of the 9 back. And then in 2023, we hope to get the remaining 2 million. But we can definitely see the toll that the shutdowns and kind of the slowdowns of the economy due to COVID were in 2020. In contrasting the national with then DFW as a whole, we can see that DFW still had significant job loss in April and May, kind of had that same tapered effect, although did get the jobs back a little bit quicker than on the national scale. But you can see when we look at October, November, and December, still had that stalling effect in the fourth quarter. But the good news is with DFW, looking at the jobs in 2021, we'll get 250,000 so plus jobs, so actually about 300,000. So we'll get the 80 back and then a plus 250. And then in 2022, we'll be closer to kind of a normalcy of around 115,000 jobs. So DFW will definitely fare better from a jobs perspective over the course of this year and next year than nationally as a whole. So that's a good thing. And when we take a look at why DFW will fare a little bit better, you can see here, and this is as of the end of 2020, the bulk of the job losses were going to be in kind of those mid and low paying sectors. So you can see the leisure and hospitality, education and health services. And then we can see that the higher paying sectors, financial activities and professional and businesses actually added jobs annually over the course of 2020. So good underlying fundamentals for the DFW economy. And we have to assume that as the vaccine distributes in 2021 towards mid-2021 and more shops, restaurants, bars, different hospitality and leisure activities open back up, we'll gain some of those jobs back as well. If we take a look at the unemployment rates, US 6.7, DFW 6.3. So DFW faring a little bit better than the nation as a whole. And in contrast to where this was last year the nation was at 3.5 and DFW was 2.9. So we're quite a bit above that, but considering what took place in 2020 with COVID and all the economic shutdowns and even what's still carrying into 2021, still not too bad given everything in consideration. When we take a look at median income, we can see that this is Dallas is at 75,000, across the U.S. is 66, Fort Worth is at 71. So both main areas within the Metroplex are above the nation and fare well. We know that DFW has a large concentration of your higher paying jobs and your higher paying economic sectors, which again will fare well as we get into 2021 and 2022 and gaining those jobs back and getting back on track after the downturn of 2020. When we take a look at home prices, they're up to about 309,000, which is about 5% year over year. So, and we'll get into obviously more of the multifamily stuff as we look in, but the home prices have shot up. Demand for single family has shot up. There's lots of different stories out there of out-migration out of urban centers and kind of your older millennials and having COVID and kind of the economic shutdown bring about home buying at a quicker rate. And so we've actually seen that the price has gone up year over year and that the demand is higher from a single family perspective, which is a good thing. Consequently, when we look at home ownership, you can see that DFW is 68.9%, across the U.S. is 67.4%. When we take a look at the numbers, the DFW number is actually up about 7 percentage points since Q1 of 2020, where the U.S. is actually down. So it just shows how much the single family market changed. Obviously, the lower interest rates in the lending, and then obviously, like I said previously, the out migration out of urban centers, and just change in thoughts and change in habits work from home, people started taking a look at the space that's needed, separate office space, wanting yards and things like that. So it changed and kind of sped up people's decisions. And so it's good to see DFW poised with the home ownership and then with increasing prices. So now we're getting into the multifamily data. And when we take a look at annual demand, and this is going to be for DFW, we can see that 2020 was off a little bit from kind of the peaks that we saw in 2018 and 2019, but right around what we've seen over the course of the last 5 or 6 years, and you know, accelerated from what we saw kind of post recovery from the great financial crisis. So the 20K, while it's off from the last couple of years, still very strong, again, considering what we saw with the shutdowns in the economy in 2020. And this next slide will actually kind of illustrate that. What we did here was break apart the demand because 2020 was really a tale of two halves. So your first half and your second half. And you can see that in 2020, the first half demand was the second lowest seen in the 10-year period. And then second half demand came on very strong and was the highest second half demand that we've seen since 2010. So economic recovery is strong in DFW. Demand was strong in the second half once things kind of opened up and we understood the disease a little bit more and the economy opened up a little bit. So really good headwinds heading into 2021. And here we'll get into the permitting activity. Now this first slide here is going to be on a national scale. So you can see that single family permitting is up 14% year over year. And multifamily is down 10% year over year on a national scale, and bringing multifamily down to about where it was in 2006. Not surprising that multifamily was down. It was kind of a wait and see. And then again, with the lending conditions and the advanced demand for single family, not surprising that permitting for single family is up. When we take a look at DFW, it's the same kind of picture that we saw nationally, except it's exacerbated more than what it was nationally. So we could see that single family is up 25% year over year. Now you're getting to levels, matching what we saw in 2006. So in the housing boom prior to the crash in 2008. And then we can see multifamily is down 43% year over year. Still not to the levels that we saw, in the recovery of 2009 and 2010, but is a significant downturn and something to keep an eye on as we look at supply in the latter years of our forecast, so probably about 3 to 5 years out. Taking a look at supply, 2020 had a healthy supply in the DFW area of 26,000 units. Again, right on par with what we've seen the last 3 years. We saw kind of the breakdown of the demand. And so that demand and supply ratio stayed fairly healthy in 2020. When we look at what's forecasted for 2021, still a healthy supply of 28,000. And even when we go a little bit further out from that, again, we can still see in that kind of 27,000 range. It does start to kind of taper off as we look into the latter years of the forecast. But if permitting starts to kind of pick up in 2021, we'll see those numbers adjusted. But still around, current levels. We'll even see it elevate in 2021. So we're still looking good from a supply perspective in DFW. And no surprising based on that DFW still leads in construction activity. So these are going to be units under construction as of the end of 2020. No surprise that DFW is still first. That delta between first and kind of the next 3 or 4 has tightened a bit, but we can still see that they are the leader over DC. Some typical ones that you've probably seen: Newark, LA is always on the list, Phoenix. New York still is a hotbed for construction, and then Houston. One kind of note: Minneapolis actually took Chicago off the list. So kind of your Midwest leader typically is Chicago, and we can see Minneapolis come in and supplant them as the leader. And then as you kind of round out, you get more of your Sun Belt markets, Nashville, Charlotte, and then down into Florida with Miami. So taking a look at the construction in the Metroplex, I wanted to break this out by submarket and then kind of give a little benchmark of what share of the overall metro construction. And then what I did here as well is the red highlighted submarkets are going to be what we consider the urban or the urban core submarkets. And then your more suburban submarkets are the ones that are in black. And we can take a look and see you're still getting heavy construction in 3 out of the 4 of what we consider the urban submarkets in DFW. So your in-town Dallas, your Oak Lawn, in-town Fort Worth. You can see the units under construction and then the percent. Very high concentration. You can even see that on the screenshot that I took of the snippet around, Dallas over there and Fort Worth. And then we can see that your suburban leaders are still your Frisco, your Allen and McKinney, Las Colinas, Denton, Grand Prairie. So DFW shows that the construction is varied and not just 100% concentrated within the urban core, and you are getting a good spread into those suburban submarkets. So a lot of information on this slide, and I will send the slide deck out at the end. So if anyone has any questions, we can certainly address them as well. This is going to be in order of increasing or the most supply for 2021. So going from left to right. And again, no surprise that your 2020 leaders are still your 2021 leaders. So again, Allen, McKinney, Frisco, did the same with the urban submarkets and highlighting them red. One thing to note then from an urban perspective is you can see North Arlington, we consider that an urban submarket of Fort Worth, has historically been a low supply market. You can see that they had no supply in 2020 and scheduled to get 704 units in 2021. So that's kind of an outlier there. But you can see that typically the supply is the same, but you will see certain areas like Central and East Plano getting additional supply, Burleson, Johnson County getting additional supply in 2021. When we take a look at monthly rent levels, we can see that they're well below the U.S. average. So I did a combined of DFW. You can see, a little bit under 1,200, Dallas a little over, and Fort Worth a little over 1,100. And we can see that it's less than the U.S. average, which bodes well. Most of your Sun Belt markets tend to be a little bit more on the affordable side compared with your coastal gateways and obviously the U.S. as a whole. And I think that's part of the reason why, from a multifamily perspective, there is so much demand within Dallas. You have a high supply of tech jobs, higher paying jobs, and even the 1182 bodes for affordability for even your kind of low and mid sector paying jobs as well. So good story across DFW and still room for rent growth from your multifamily operators. But as we've kind of said, since the beginning of this, 2020 was just a rough year to go around. We can see that rents dipped for the first time in DFW since the recovery from the great financial crash. So DFW is that black line and the U.S. average is that blue line. We can see on the U.S. average that it's starting to kind of go up a bit. So it's already hit its plateau. And we can see that it's a little bit more level from a DFW perspective. So while it will get to positive and it's kind of plateaued in its dip, it's not on that upward trajectory quite yet, at least as of the end of 2020. And when we see it kind of broken out by Dallas and Fort Worth, we can kind of see that K-shaped recovery If you've paid attention or attended any of the webcasts that we've done recently, you'll know that we're seeing this K-shaped recovery amongst a lot of markets across the country. You're starting to get out migration from some of your coastal cities, and then some of the markets that are adjacent to those are actually then the beneficiary of that out migration. So one that's talked about a lot is Riverside in California, getting that migration out from Los Angeles. And we're seeing that it's not necessarily from an out migration standpoint from Dallas to Fort Worth, but just the fundamentals of Fort Worth are a little bit different than Dallas. And so you can see that we've already seen that dip in second quarter, and that it's already gone up and it was in positive territory. And then we can see Dallas, it's in that straight line. So it has kind of plateaued towards the end of the year, but we're still in negative territory, and it will take a little bit longer to get to positive. So when we look at the forecasted rent change then for 2021, we can see that by the end of 2021, it is positive across DFW at 1.5%. Across the U.S., it's 0.7%. So DFW will get back. What's holding the DFW number back, as you can see, Dallas only gets to 0.7, while Fort Worth is 3.7. So Fort Worth is really the leader when we combine the Metroplex in terms of rent growth. So Fort Worth, when you take that separately, will get back to positive annual rent growth in third quarter of 2021. And then Dallas, that 0.7 is as of the fourth quarter. So Dallas, from a positive perspective, is just delayed by 1 quarter in 2021, but they both eventually get to that and fare very well in 2021 compared to the U.S. So a lot of information on this slide. This, again, is just for more context. When I send the slides out, I wanted to make sure, I think I included 30 out of the 48 submarkets within the Metroplex, and make sure I included a lot of information. Again, the red ones are going to be your more urban core, and then the black ones are going to be your suburban. And so when we take this is really kind of that supply story when it comes to rent change, and then some of what we saw from the urban core performance, where you can see that, I mentioned North Arlington is typically a low supply market. And so even though that's an urban core market, they were able to get, fairly well annual rent change in 2020 and projected to get good rent change in 2021. And then in contrast, when we can see the other 3 urban core markets, those are kind of at the bottom of the list, with, not surprising, in-town Dallas at the bottom with -5.6 in 2020 and -1.8 in 2021. But we can also see some suburban ones there. Allen McKinney, while it was still positive in 2020, that supply starts to creep in. And so we project, -0.9 in 2021. And you can see some other high supply submarkets on there as well. Oak Lawn, Park Cities is another one, -6 in 2020, and a little bit better in 2021, but still negative. When we take a look at occupancy, this is going to show, again, DFW, so the Metroplex as a whole compared to the U.S. average. So the Metroplex, and you can see typically, historically, it's run below the U.S. So nothing to really worry too much about. You can kind of see DFW was on that downward trend. The U.S. plateaued a little bit towards the end of 2020, but nothing to be concerned, especially when you compare it to the recovery from the Great Financial Crisis, and the fact that we're about 5% above where we were there. We're very strong occupancy, whether you look at the national picture or DFW as a whole, and will continue to kind of stay pretty healthy. So the fundamentals are there, and you're still going to have that demand as we head into 2021 and 2022. When we break it out by Dallas and Fort Worth, again, you can see that Fort Worth is a little bit better than Dallas. Both were kind of trending down a little bit, but again, still very healthy compared with the post-recovery in 2010 from the Great Financial Crisis. And in 2021, we'll see that across DFW, the occupancy will remain lower than what the U.S. average is. But again, it always kind of trends below the U.S. average. And 94.5 is actually close to the 5-year average. So we're still kind of around there despite the limitations and what occurred in 2020. And then you can see the breakout by Dallas and Fort Worth, very close to each other. And as we saw, Fort Worth will be the beneficiary of a little bit better rent growth in 2021 than Dallas is. And then lastly, this is that comparison that I wanted to put up. So on this, I put DFW as a whole, so the Metroplex combined. Then I did separate out Dallas, Fort Worth, and then your 3 other main Texas markets of Austin, Houston, and San Antonio to just kind of show the juxtaposition of your supply, rent, and occupancy story from 2020 and 2021 with those markets and how those might fare. You can see, Fort Worth, 1.7 in 2020, 3.7 in 2021. So out of them, that'll fare the best. Even though that it's getting additional supply in 2021, and then we can see, Dallas does again get the positive territory. Austin is still going to be a struggled market with that additional supply. It struggled heavily in 2020, and will continue to do so. And you can see a little bit lower occupancy rate. Houston is one. Supply will taper off a little bit, but with the energy sector, it's still going to continue to struggle in 2021. You can see that's typically a low occupancy market. So while it will run below 93%, it usually runs around 93%. So it's not too far off. And then San Antonio fares a little bit better in 2021 at 0.3%, but again, still seeing a little bit elevated levels of supply compared to what we've seen in the past. And that is it. So hopefully I wasn't able to see if we had any questions come through. Let me see if I can pull that upper part. Doesn't look like there was any questions in the Q&A. So I guess we can kind of open it up to questions and answers.
Dan, can you hear me?
I can, yes.
Okay. I'm not sure that that everybody has the ability to do the question and answer thing. But let me ask you a couple of things. So we talked about 2021. Do you have any kind of projections for 2022? I know you had mentioned kind of forecasting a few years from now, but that's only 11 months away. Any thoughts on that?
Yes. So, and actually, I can pull that up. Believe I'm still sharing my screen. I can actually pull up in our platform because I don't have, unfortunately, prepared notes on 2022. So to kind of just pull it up real quick. From a jobs perspective, I talked about we'll gain all of the 80 delta that we saw at the end of 2020, plus an additional 250,000 jobs in 2021. So from a jobs perspective, we're looking good. And then in 2022, it'll be around 115,000 jobs. So we get back to kind of the normal levels of, 100,000 jobs annually. And let's see, let's go 2021. So we can see rent fares pretty well as we get into 21 or 2022. I talked about Dallas finally gets to positive in the last quarter of 2021. We can see Fort Worth has that steady decline, and then hovers around, 2.5 to 3% in that long term. We can see, Dallas get to about 4 to 5% as we get into 2023. So it'll hover around kind of your, I guess, what we call pre-pandemic or pre-COVID levels. But because of the loss within 2020, you have kind of a larger delta to kind of climb your way back up with the continued supply as well. But kind of longer term, DFW is poised to have kind of a stronger recovery than, some of your coastal markets and then kind of the nation as a whole.
Very good, very good. Dan, I don't know if you have access to the questions. If you don't, we have 3 questions. You have access to those? You want me to read them to you?
So I've got one here. How are the older apartments 20 to 30 years holding up? Is the market such that operators are spending money on them to keep them up or make improvements? So what we saw within 2020, a lot of the capital markets slowed down. And once the activity picked back up, what you're seeing is that a lot of the activity is around your value add. So your, 10, 20, 30-year-old, kind of class C, maybe class B minus apartments that are in your, Sun Belt markets to where there is opportunity there for value add. And so those held up as they're currently constructed, kind of that workforce class C housing. In terms of the rent growth is always, around 2% or so, because you're typically the people that rent those are more stressed financially, and so typically it remains around inflation or below inflation because you can't really go above that. The payments were kind of fatigued a little bit within that market, but that's the market then from also a capital markets perspective that is the highest right now, where people are looking to add value as opposed to buying your class A urban core assets that in many of your major gateways are getting hit really, really hard.
All right, thank you for that. We've got a really good second question. I don't know if you can again see that from an anonymous attendee.
Is there a specific type of multifamily development that is getting popular in the DFW market? I would say that is more of a function of where the building is occurring. When you look at the urban core, if it's on a tighter, plot of land, and depending the space around you really can't go, out, so you have to go up. So that lends itself to more your high-rise construction. When you look at a lot of the suburban developments, it's going to be more of your, mid-rise construction. So, under 7 stories. And I think what you're seeing in a lot of the, what would we call it? The higher suburban markets or the higher suburban rent submarkets is you're seeing ones that are close to shopping centers, or you're seeing ones, kind of like close to bars, restaurants, amphitheaters like we saw in, Irving. So you're getting kind of that urban nightlife, but more in kind of your suburban setting. Hopefully that answers that question.
Okay. One last question from Houston.
So what is the trend and outlook for multifamily new construction in Houston? I took a look. Let's bring that back up here. So from a supply perspective, we saw about 18,000 units in 2020. That number will taper off a bit to about 15,000 units in 2021. So still healthy levels of supply for Houston, even into 2021. Let me make a note, and I can add a couple slides for Houston specifically. I can take a look at permits and kind of give that juxtaposition, as well as look at other supply and demand as well for Houston. And actually, let me see, I can probably pull that up here as well.
Dan, if you're going to add some additional supplies, I think we've got some attendees from the San Antonio area. So if you wouldn't mind adding a couple slides on the San Antonio area, that would be greatly appreciated.
Sure.
Thank you.
San Antonio permits and supply demand. So it looks like annual supply, whoops. So it looks like it begins to kind of taper off as we get into the latter years of the forecast. And some of that just could be permitting levels. How we forecast supply is the very first, so the 4 quarters, the first 4 quarters, so in this case, it would be the calendar year of 2021, is going to be based on identified supply. So things that are currently under construction and things that we anticipate will deliver within that 4-quarter period. And then within the latter 4 years of the forecast is when the modeling picks up. So it looks at permitting, it looks at what's under construction now that'll bleed into the latter years and won't deliver within the first 4 quarters, and then also looks at what's currently planned. So was permitted previously, and then what looks at currently planned as well. So always subject to change, but does look like it kind of tapers off a bit as you get into kind of the first quarter of 2023, where you get into about 10,000 units, where we're at about 20,000 units annually now.
Very nice. Okay.
I can pull up San Antonio really quick as well. So it looks like San Antonio stays pretty consistent around that 4,800 to 5,000 mark throughout the forecast period. So they're pretty consistent with supply. A little dip right here in 2022, but stays pretty consistent.
Okay. I think we've wrapped up all the questions. Just one quick note on the chat part on the very bottom of everybody's portal Zoom meeting. There's a chat bar, and then Misty Barcelone has put her email on there. If anybody wants Dan's slide deck, you can email Misty Barcelone at the Dallas Builders Association. Her email address is on the chat bar of this platform, and Dan and Misty can get that to any of the attendees. And so, Dan, I want to thank you very much for today's presentation. You've done an excellent job and a wealth of information, and I know it takes some time out of your day, so I really appreciate your time and your expertise and your knowledge. So thank you, and your preparation. Thank you.
Absolutely. I appreciate the opportunity to come and speak. I hope everyone enjoyed the presentation. I can get the slide deck out to Misty. I will go ahead and add Houston and San Antonio before I do that. And then I left up the slide that has my direct email address on it as well. So if anyone has any questions on the particular slides, or if on the ones where it was broken out by submarket, if you don't see a submarket that you're interested in, I think I did 30 out of the 48, so tried to do the majority of them. But if you're interested in any particular submarket or anything like that, my direct email address is there, and you can reach out to me with any questions as well.
All right. Thank you. Thank you, Dan. So I did want to told everybody that I was going to make a couple of special announcements. The first special announcement was actually our next speaker is going to be Craig Johnson, who is the Director of Architecture and Construction for the Collin College Technical Campus here in Allen, Texas. So that our next webinar is going to be April 6th. So please stay tuned, mark your calendars for that. If you need more detail on that April 6th with Craig Johnson, please, you can email me or Misty Barcelone for that. The other special announcement, something that the Multifamily Builders Council and I have been working on most recently, is a job fair summer intern program at the CCTC, the Collin College Technical Campus. And so if you're interested in, as a company, whether you're a subcontractor or a general contractor, owner, developer, if you're interested in trying to grab one of these younger generation folks that's currently in the Collin College Technical Campus program, you can email and be a part of our job fair. You can email me or again, Misty Barcelone at the Dallas Builders Association, and we will connect with you on that job fair that's coming up actually in March. So in about 30 days or so, we are going to start our first job fair to try to bring the younger generation in the multifamily space. So we had about 80, close to 90 participants on today's webinar. So I want to thank everybody that participated in today's webinar, especially Dan for being our keynote speaker. And without further ado, that will conclude today's webinar. So thank you and have a great rest of the week, everybody.